Hey, it's Soleil, and this is an episode of Solving the Money Problem, or else uh, Red Pill Strategies for the Orange Pill Investor. I haven't really made up my mind. Maybe it'll just be both. I do what I want to do. And I'll be discussing a couple of principles that were presented in two of those channels that I mentioned before that I really enjoy. Solving the Money Problem with Stephen Mark Ryan, and Bitcoin University with Matthew Cratter. I'm going to play just a few seconds of a recent video that Bitcoin University put out, and it was when to sell Bitcoin, and the spoiler version is never, and I'll go ahead and react to that opinion.
Supply while Bitcoin is so scarce. Exchanging a scarce asset for a non-scarce asset is irrational behavior. Again, it's your money. Bitcoin is yours to do whatever you want with. So if you really want that Lambo, go for it. But what I would say is don't expect to outperform hodling Bitcoin by trading Bitcoin or by trading any other crypto. You're not able to do this over the long term. If you think that you can do it, you're overestimating your trading ability and the significant drag on performance caused by short-term capital gains taxes. If you make just...
Okay, that's good right there. So what I will say to that is that to an extent I agree that trying to time the market and dealing with some tax consequences may not outperform hodling. But that is not the point. So when all you do is hodl, you're going to just grit your teeth during the bear market and suffer. And then, I mean, I'm a maximalist, so I think that Bitcoin is going to continue to go up more than it goes down. But then you're going to feel like you won the lottery when it goes back up, and then you're just going to grit your teeth and bear it during the bear market again. That doesn't make any sense to me. And what I would say, instead of never taking profits, what I'm saying is, in a sense, always take profits. And the way that I do that is selling covered calls. And before we even get into that, the reason why you would do that is a principle that I basically stole from the Tasty Trade videos. And the reason why you would sell a covered call against an asset which limits your maximum profitability. So whatever strike you pick, if I own 100 shares of Riot and I sell the 17 strike, that means I cannot make money if it goes above $17. If I sell the $18 strike, I cannot make money past Riot going above $18 by this expiration date. Now, the reason that I would do this is to increase my chances of success. So what I am not saying is that this would always outperform hodling and never incurring a tax burden. What I am saying is, if you're willing to limit your profit, there's a higher degree of success. And, for example, there's let's just say there's a 90% chance that Bitcoin goes to $1 million this bull market. Okay, so that's risk adjusted. I guess what is that? 900,000. It's worth 100,000. But what if? Actually, I think I'm giving this scenario wrong. But what if there was a 99% chance that you could get 750,000? Would it be worth the almost sure thing? And then what if it was a 20% chance that Bitcoin goes to $1 million? Would you take the 75% chance that Bitcoin or that your account with Bitcoin in it would go to $500,000 or $250,000? That's the pros and cons, and that's the you have to sacrifice something to get something, basically what I'm saying. And as far as I'm concerned, taking profits off the table every single week is increasing your chances of success. But not only that, you can actually increase your holdings, because if I sell 100 shares, I'm sorry, excuse me, I buy 100 shares of Riot, that costs me $1,600. Then if I sell a covered call at, just to get 1% profit that week, 1% ROI over 52 weeks would be 50% interest. So, I mean, you can get 1% premium on the 18.5 strike. So I get $16, and then I can buy another share. So you actually could end up with 101 shares of Riot just by selling this covered call at 18.5. Now, granted, if the price of Riot shoots up to 19 or 20 or 25, you won't be able to gain that much. However, I mean, just look at the chance of profit. I mean, there's only a 10% chance that it'll do that if these are roughly accurate. So my principle would be doing this every week. So next week you would have 102 shares, and then the week after that you'd have 103 shares. Eventually you'd own 200 shares, and you could sell 2 of these strikes, get $32, and then you're going to get 105 shares a week, and then 100, or you're going to get 105 shares total, and you can continue this, into infinity. But the other thing is that what if the price of Bitcoin of Riot is kind of slightly going up? And what if in a month the price is $18? Well, now you're probably going to be getting 1% of that, which you're going to be getting $18, and you're still going to be able to buy 1 share. But the value of your account is now $1,800 instead of $1,600, and by then you might own 105 shares, and they're all worth $18. So yes, you might incur some tax burdens, and I'm not a tax professional, I'm not even a financial advisor, so this is all just for entertainment purposes, but this is what I do. And for me, the ultimate goal would be to get 10,000 shares of whatever stock you're interested in. So, maybe if you're balling and you can afford $15,000 for Riot, you could do this now. So if you bought 10,000 shares times 16, I guess you need 16 grand. So that's 16 grand you plunk down for Riot. And if you sell 160 covered calls at the 18.5 strike, you'd be able to purchase another 160 shares, because you're going to get $16 worth of premium. I'm sorry, it's not 160. 16 grand. You're going to be able to buy 100 shares this week, and then next week you'd buy 101 shares. So now you've got 16101, and you sell 101 covered calls at 16 cents a share, and then the week after that you're going to sell 202. And at that point, I call this kind of reaching critical mass. So once you have 10,000 shares of a stock, and you can sell 100 covered calls a week, getting 1% ROI for that week, you can buy 100 shares every week, which entitles you to sell even one more covered call. So in that sense, you're not just getting 1% every week, you're getting 1% plus 1% of 1. And that's when, I guess I don't know if that's exponential growth or whatever, but that's when it really starts to add up. And really, you can be way greedier with the premium. If you sell the 17 strike, I mean, if you buy these 100 shares for $600, this is basically 2% ROI, and you can buy 2 shares. And if the price does go up from 16 to 17, if 1% profit is $16, what is that going to be like? 550. I mean, hell, it's like 7% ROI if the price goes up from 16 to 17, plus the 2% that you get on the premium. So if the price goes up to 17 is, it's called the call away value, which is the profit that you can make from the current share price to the strike that you pick. So in this scenario, you'd get basically $1 worth of call away value, so that's $100 plus the $35 that they pay you here. So your potential profit would be $135. You go up to the 18 strike, your call away value is $200, but you're only going to get a little over 1% premium here. So, when I have multiple increments of 100 shares of something, I might look at, okay, what gives me a couple of percent call away value, so anywhere from like the 16.5 to the 17.5, and then maybe I go all the way up to the 18.5 and just get 1% premium on one contract. You can put together as many different combinations as you like doing this. So while I agree it's probably not possible to time the market, what you're actually doing is you're taking the guesswork out of it. You're just timing the market every week with a disciplined strategy. You're not saying, oh, I think Riot's going to go up to 17, so I'm going to pick 17. You have no idea. I have no idea. You don't know when the ETF is going to be announced. You don't know, or going to be approved. You don't know when Michael Saylor is going to buy another frickin' 500,000 Bitcoin with MicroStrategy. You don't have the slightest idea if another FTX is going to shit the bed and the price is going to go down. So this is basically taking profits if you're not an experienced trader. So I'll say that using this method, I have never consistently lost money. I mean, anytime the spike pumps past your strike, you could technically lose a little bit. And it's not even really that you're losing anything, but you could technically not make as much money as you would have if you had done something differently. And so what I mean by that is, if you pay $1,600 for 100 shares, and you sell the 17 strike, and the price goes to 18, okay, sure, you only made $135, whereas if you hadn't done anything and the price went up to 18, you could have made $200. But the price could just stay at 16, or the price could go down to 15. And in that case, you've got an extra $35 in your pocket, or like what I do, I purchase 2 more shares. So if someone buys 100 shares and just does nothing, they're basically a slave to whatever the price is. But what you're doing, if you sell covered calls and then purchase more shares with it, you can actually increase the number of shares that you have without ever putting another cent into this account. And you can do that forever. There is a scenario that could happen that could force you to sell these shares. So if the price went up from 15 to 25 and you couldn't afford to buy back this call, then yeah, you would be forced to sell these shares off. And then the price could, crash back to 15, and on a short term basis that would suck because you paid like $800 to retain possession of these shares, and then the price went back down to where it started, and technically on that 1 week basis you'd have less money than if you had done nothing. However, over long periods of time, this has never really failed to make money for me. Like I said, it's not necessarily going to be superior to just buy and hold, but it's not supposed to be. It's supposed to have a lower maximum profit with a higher chance of success. That's the point. And in my experience, it's been true. And let's just for fun, let's look at the big daddy of them all. So we got MicroStrategy, and to me, as we're probably heading into a bull market, this is the big daddy of Bitcoin investing, and that's why I call it red pill strategies for orange pilled investors. So, a lot of people are like, you have to buy and hold Bitcoin, and you have to have your own keys, and you blah blah blah. But I enjoy trading in the stock market, and if you can afford 100 shares of MicroStrategy, not everyone can, but if you can, you could sell a covered call against this and get, let's see, 1% of 700 would be $7. I mean, you can get 2% at the money, and this isn't even a full week. So this is Tuesday. So you're not even getting a full week's premium. I mean, it would be much more. And you can do the same thing. So you could, you're going to get $700 for this. You can buy 2 more shares of MicroStrategy. But for most investors, I mean, you probably shouldn't even be trading stocks if you've got less than 2,500. I mean, 5,000 is probably best case scenario. And if you're just like, oh, I got $500, I want to play the stock market, you're probably going to do dumb shit like buy calls that expire worthless, and that's just a recipe for failure. So, I mean, unless you're a master of trend following and momentum trading or whatever, and I'm not. So if you are, more power to you. But this is, and really you can take. So this money is yours to keep. When you sell a covered call against 100 shares of stock, that's your money. So you can buy 100 shares of Riot for $1,600, sell a covered call at the 17 strike. You can transfer the $35 to your checking account, and then you can buy $35 worth of Bitcoin every single week by just owning 100 shares of stock and selling a covered call against it. So you can use this as a way to get extra money to buy Bitcoin. I mean, even if you are a big Bitcoin maximalist, this is just a way to generate income. A lot of the people say, look, whatever your chosen profession is, do that, do it well, make money, and then buy Bitcoin with the profits. And what I'm saying is, this can be a way to generate income outside of just your regular job. It remains to be seen whether putting $600 into Riot and then buying $35 a week of Bitcoin at the end of the bull run, the next bull run, I mean, Riot's going to go up as well. So with the combination of how much Bitcoin you can buy with selling these covered calls, or what I do, buying an extra share or two of Riot every week, which one of these would give you the most bang for your buck? That remains to be seen. I don't think there's been any studies done on anything like that. But yeah, that's how I do it, and that's that's pretty much that strategy in a nutshell. Let's see, how long have I been going here? 20 minutes? That's probably long enough. I was going to talk about something that Stephen Mark Ryan said in one of his videos about, I think I mentioned it in the last video too as well. Actually, I can just do it quick. So I kind of went all in on Tesla right before it crashed. I got in at like 220. It's probably here. And then it crashed to 100. When did it crash to 100? Okay, here. So I got in like here-ish when it was 220. October 2022, is that right? Anyway, I suffered through this. So I wasn't even using margin at that time. So I wasn't in any real danger. And I thought, okay, worst case scenario is that Bitcoin falls to 100. But I didn't think it would happen in just a couple of months. I thought maybe something like that would would take, 6 months or whatever. I definitely underestimated how fast this could crash. And even though I hadn't used any margin when I started, I thought, okay, well, I'll buy the dip when it goes to 200, and I'll buy the dip when it goes to 150. And by the time it got to around 100-ish, 110 maybe, I was close to a margin call. So the calculation in my head was, okay, I already fucked up. Like, I screwed up back here. That was the mistake. I shouldn't have tried to dollar cost average and buy dips on margin without calculating precisely when I would run out of money. So I kind of reevaluated and I thought, well, at this point, I think worst case scenario is it could go to like 75 or 80. And if it did go that low, there was a chance I could get a margin call and be severely damaged by that. So I sold some of my Tesla at like 110 or 120. And when at that point, I think I had dollar cost average my Tesla down to like 170 a share from 220. So what did I lose? From 170 to 120, $50 a share. But I sold just enough to give me a cushion, and if the price went down to 75, I wouldn't have lost everything. I would have been fine. So that was a calculated risk for me. So that's why I do take a little bit of issue with SMR when he says that he likes to clown people who, quote unquote, panic sold at 120 a share. And for me, it was a calculated move. And if you say, if I knew the future, then of course I wouldn't have done it, and I would have saved myself, $50 a share loss on however much I sold at that time. But I think it was the correct move based on reasonable predictions. And so I lived to fight another day. I didn't get wiped out, and that's all that matters. And the price is back to 240 now, so I'm, even considering the loss that I took, I'm still ahead in the long run. So no, don't regret it. I mean, only if I, Monday morning quarterbacked it and say, oh, if I knew the future, would I not do it? Of course I wouldn't do it if I knew it was going to happen. But I don't regret it. I think it was actually the correct move to, what does one guy say? There was a guy that had a blackjack course, and he said he'd rather gain money slowly than lose it quickly. So that was my thinking on that. I needed to protect my investment based on the mistake that I was, not the mistake that I was making at that moment, but on a mistake that I had made, months ago, not anticipating how far and fast Tesla could drop. So I should have done things differently prior to that point, And it resulted in taking a nice little loss on that, but it all worked out in the end. So those are my two, I guess, disagreements with two of my favorite content providers. I will link both of their channels in the comments. You should go to their channels and like and subscribe everything that they put out. I'm trying to find anywhere that I can disagree just to make it more interesting, because nobody wants to see me just come in here and agree with everything they say. If that was all I was going to do, you could just watch their shit and not bother with this video at all. So hope you liked it. I hope, even if you don't agree, it's food for thought. And talk to y'all next time.